Hey guys, welcome back to Financial Professional. Today we'll talk about how much money Warren Buffett has made on bank stocks in 2021. Let's head into it. Warren Buffett. Warren Buffett showed early on that he had strong business skills. Buffett became one of the world's richest men and a celebrated philanthropist after overseeing the development of a conglomerate with interests in the media, banking, oil, and food and beverage industries. Buffett Partnership Limited was established in his hometown of Omaha in 1956. Using Graham's methods, he was effective in discovering undervalued businesses and became a millionaire. Berkshire Hathaway, a textile manufacturer, was one of Buffett's favorites. He started putting money aside for the future. Despite the firm's growth, Buffett dissolved it in 1969 in order to concentrate on the production of Berkshire Hathaway. Instead of expanding the business by purchasing assets in media, insurance, and oil, he phased out his textile manufacturing division. The Oracle of Omaha, who was enormously wealthy, also managed to turn seemingly bad investments into gold, most notably with his purchase of the scandal-plagued Salomon Brothers. Berkshire Hathaway, the legendary investors firm, has spent most of the past year selling or trimming its bank stocks. However, so many bank stocks are now selling at all-time highs. Berkshire has made a lot of money on the ones it hasn't sold. Buffett worked for years to develop and retain some of these roles, and now he's reaping the benefits. In 2021, here's how much money Buffett and Berkshire Hathaway made on bank stocks. Also, make sure to write your thoughts in the comment section.
Warren Buffett has been and continues to be a role model for millions of investors across the globe, with every investor being asked to emulate him.
A great start to 2021. Before we get into the gains, it's worth noting that Buffett and Berkshire have possibly lost money or missed out on earnings on some of his bank assets over the last year. He sold the majority of his Goldman Sachs holdings in the first quarter of 2020, the majority of JP Morgan Chase holdings in the third quarter of 2020, and a large number of Wells Fargo shares at the end of quarter 1 2020. All three of these stocks are now trading at significantly higher levels. However, knowing that those losses were difficult because Berkshire's 13F fillings, which detailed the stock movements the company made in each quarter, just tell us what Buffett and his team did in that quarter, not the date they purchased or sold the stock, or for what price, making it difficult to provide information. Gains, on the other hand, are much easier to calculate, because 13Fs show us the value of specific holdings from one quarter to the next. Buffett increased his interest in Bank of America significantly over the last year, while maintaining his holdings in other banks. Banks had a great start to the year. In the first 3 months of 2021, Berkshire Hathaway made nearly $13 billion in 3 months between the end of 2020 and March 31 on the 4 key bank assets remaining in its equity portfolio. Berkshire has definitely seen even more gains in the second quarter, with all 4 of its stocks up from where they were at the end of the first.
Why banks right now?
They're businesses I understand. I think 10 years from now that they'll be worth more money.
While the pandemic initially shook the banking sector, the coronavirus is likely to be remembered as a significant catalyst. Prior to the pandemic, bank stocks has been doing well, but they were also dealing with some reputational problems from the Great Recession, which many investors still recall. During the pandemic, the banking sector not only demonstrated much improved lending practices and loan efficiency, but it also played a key role in distributing funds from the Paycheck Protection Program. Both assisted banks in improving their reputation with customers and the general public. Furthermore, the pandemic has set the stage for a multi-year bull run in the banking sector. The pandemic demonstrated to banks and investors the value of being ready for a more digital future. Furthermore, it demonstrated that banks could reduce their reliance on bank branches by investing in digital capabilities and aim to operate more efficiently in the future. Banks that had invested in the right digital capabilities were rewarded, while those that had fallen behind realized it needed to improve their digital capabilities and profitability or consider selling their company. The pandemic has also helped banks prepare themselves for increased profitability. In general, trillions of dollars in deposits have poured into the financial system.
The whole panoply of things you could do, but I'm pretty sure that they won't disappoint me.
With many of them expected to say, higher interest rates can boost loan profit margins, and strong economic growth should ultimately favor banks' balance sheets. More gains to come. Although I disagreed with Buffett's decision to sell all the banks, I understand that with a $297 billion equity portfolio, he views risk in a different light than I or the average investor. I also believe he has selected a strong group of banks that will continue to grow in the long run, whether it's Bank of America, with strong interest rate sensitivity, will push profitability even higher in a rising rate setting, or US Bancorp, with its burgeoning payment sector. Although Berkshire's banking exposure is much lower than it was a year ago, I expect the bank stocks the business owns to continue to generate income. What do you think about Warren Buffett? Did you know how much money he made in 2021 with bank stocks? Let us know in the comment section. This brings us to the end of our video. video. I hope you enjoyed it, hit like if you did, and don't forget to subscribe to our channel so that you don't miss any of our videos in the future. Also, watch the 2 videos that are on your screen because I'm sure you'll love them. With that, I'll see you in the next video.